Amid global uncertainty, experts in the gold market have a wide range of expectations of where they believe gold will be heading in 2012. To find out exactly what some of those expectations are, I'm joined by Eugen Weinberg, who is Head of Commodity Research at Commerzbank. So Eugene, let's start by clarifying one of the most important questions. How do you see gold performing during 2012, and what factors could be influencing this performance?
At the moment, we are a bit disappointed that instead of performing like an independent asset, kind of insurance or currency, gold is trading in the line with the rest of the commodity sector. So I wouldn't be surprised if the gold price weakness is to continue for some weeks and even months, and the gold prices to fall even below 1,500 in the first quarter of 2012. However, I think that we are experiencing right now change in the market structure, and instead of the weak hands, the stronger hands are coming, and these stronger hands will bring the gold prices higher by the end. And the most important factors this year will be definitely the developments on the debt crisis front in Europe especially, but also elsewhere. And we don't see that these problems are to go in a foreseeable future, and should these problems continue, I think that the demand for the safe haven gold is likely to stay strong, and which will bring the prices to a new all-time high above $1,900 by the year end.
Concerns surrounding Iran and the potential of conflict in the Strait of Hormuz have also brought some safe haven demand for gold during the last few days. How great of an impact could this have on the precious metal market?
It's not surprising that the gold prices are holding better than the rest during the periods of pronounced geopolitical tensions. But definitely, in this case, it's helping the oil prices more than it's helping something like gold. And definitely, it's not our base case for our assumption of for the higher gold prices that these geopolitical tensions are to continue, but definitely it should be helping the gold prices to perform better should these geopolitical tensions as well as other risks continue. So it's definitely one of the factors which is moving the investors towards gold, the unsecurity, the overall unsecurity.
What about the central banks? They were one of the main buyers throughout last year. Is this a trend that is likely to continue this year?
Oh, definitely. This is a trend which is likely to continue now for many years to come. And last year, for the first time ever, there were significant net buyers. And the data from the International Monetary Fund already showed that the central banks bought around 340 tons of gold in the first 11 months of 2011. And they are likely to buy similar amount of gold this year as well. So we are really seeing this shift in the thinking of the central banks worldwide, especially of the emerging countries, with them allocating ever higher proportion of the gold reserves, of the forex reserves towards gold. And in fact, the proportion of gold in most emerging countries like China or India or even Russia is well below the levels seen in the Western countries.
Before we run out of time, Eugene, to wrap up, how high do you think gold prices could climb at some point during the year?
Unfortunately, it will depend not so much on the supply-demand situation on gold, because gold is not really a commodity. But it will definitely depend more on the overall situation, on the risk aversion developments, on the developments in the Eurozone crisis. And since we are skeptical that the Eurozone is to present a viable solution in a foreseeable future, but also that the debt problems in the US as well as in Japan are likely to come more in focus of the investors this year, we are likely to see the prices rising towards $2,000 an ounce probably already this year. So as long as interest rates are staying at extremely low levels, or even at negative levels, we are likely to see the gold prices rising.
Thank you very much for that insight there, Eugene. I'm afraid that's all we have time for today, but make sure you stay tuned to Dukascopy TV. Goodbye for now.